I think that there was a couple things that were going on in the options market that kind of made it attractive to at least bet to the downside or protect your long positions. And we'll talk about that with the skew with Mandy a little bit without getting too technical. But again, I would say this is that, in an environment where we've had a 13 VIX, right, there's been so much concentration on a handful of names. You could say, well, defining my risk and playing with options is cheap in a 13 VIX. It has not been in Nvidia, especially on the call side. Mandy, can you speak to that a little bit? Because Guy and I were talking about this on the desk the other night. We were looking at an equal percentage out of the money call versus the out of the money put, and the call was nearly 2x the price. Yep. And usually that's the opposite. People will pay up for protection. Speak to that dynamic that was heading into the print here. Oh, yeah, absolutely. So the bid to the call side volatility, exactly to your point, skew, which measures demand for puts versus calls, actually became inverted in Nvidia, which, for a tech name, a high flyer, it's not that unusual. We, see it sometimes going into earnings, but certainly I think inverted skew is a sign of just how bullish the sentiment had gotten in the name. But again, taking a step back, it's not just Nvidia. We see that, very flat skew, that extreme high demand for calls across a number of names and single names right now. I think this speaks to the general bullish sentiment that investors have.
Does that extend to small caps? Are we getting bullish activity in the Russell, for example?
Yeah, so what's interesting to me is that investors are still bullish tech, large cap, mega cap tech, in terms of what they're holding in terms of stocks. But what they're using options to play is a potential broadening out of that rally away from the mega cap tech names towards the small cap. So we're seeing it in Russell index options, for example, a huge surge in upside call volume. Skew and Russell actually got inverted recently, which is even more unusual. You have to go back 20 plus years to see the last time index skew became inverted when calls were trading at higher volatility than puts.
Is that interesting at a time where we're no longer talking about rate cuts as much?
Yeah, it is because of where we are in the cycle. So you talked about the inverse skew or smile. We saw the similar type of situation with Bank of America and Citigroup, but that was after those had absolutely collapsed. So you could actually argue that there was asymmetric risk to the upside. Here, I'm with you. It feels a bit extended in terms of continuing to play it. I would say the other side of that coin is I do think that bodes better for the retail investor because as opposed to continuing to pile into the stocks, they are in fact defining their risk. And if they are going to take bets that might be a little bit long in the tooth, they're at least doing it in a defined way.
Mandy, to the extent that you can want to answer this, what effect do these zero data expiry options have either on the dampening of the overall volatility or the enhancement of? I think it's a dampening, but I'm curious as to what your thoughts are.
So that's a great question, a very common question that we're getting. And I think a lot of times when people look at the impact of zero-day options on the market, they focus on the gross volume, right? So like 500 billion a day trade in these products. Of course, they must have an impact. But what really matters in terms of impact on the market, impact on the VIX, or on volatility in general, it's the breakdown in that flow, right? If the flow is very evenly balanced, there's actually very little hedging that market makers have to actually do on the back of that option flow. And what we see at CBOE, again, all SPX options trade at CBOE, what we see is that it's very balanced between buys versus sells because investors, both retail and institutional, are actually finding a diverse set of use cases for these options. So it's not just speculating, it's not just FOMO, what we saw during the pandemic. People were actually selling these options for yield, right? Selling call spreads, put spreads. So you do get good two-way traffic in these flows, and that's why it's so balanced.